The markets cooled off and fell into a wait and see mode today, and I can't imagine that tomorrow morning will be anything different. There's no reason for the markets to run if they didn't run today. We already know what is ahead of us, a likely 25 basis point rate cut, and even more important is the fact that the market has already priced in 3 rate cuts between now and December, which means if the Fed comes out and displays any hawkishness, it's going to concern the market that we're not getting those 3 rate cuts that have been priced in advance, and the market's going to sell off. Now, let me be very clear as to what I'm expecting. At 2 p.m., when the Fed announces a rate cut, I think the market will pop, and I think we could go up as much as 1%. But then the Fed's going to come out, and that's where the fireworks will really happen. He can say anything, and if he comes out even slightly hawkish, then the markets are going to do a reversal. Now, if tomorrow ends on a high note and the market is bullish, I think we look at hitting that full run-up as an opportunity to sell the rip. This is a buy the rumor, sell the news event that I think is going to be slightly delayed, which means that when the news comes out and the Fed speaks, it could lead to some extended bullishness, pulling retail buyers in. But I do believe that due to seasonality, I think that the September reality of it being one of the worst months of the year, it simply means they're going to catch up to that reputation here in the final days of September. But as we move closer to Q3 earnings, as we get closer to the mid-October big tech earnings events, I think you're going to begin to see that dip bought back up. Overall, I think the markets are bullish, but I think we're heading towards some trouble here in the last few days of September. That's my opinion. Now, we've been bullish, we've been buying, and we've been riding some heavy hitting stocks to the upside. Google has made another all-time high today, and so has Alibaba. Now, having said that, I'm going to take you into those charts briefly. It's, the show's turned into every day talking about Google and Baba. Well, that makes sense because they keep going up every day. But today's show actually is going to be about a small cap stock that has broken out, and I'm going to make a very important point about some technicals. Maybe I've never showed these before. It's both going to be an opportunity to learn and an opportunity to take some profit in the final stages of this small cap winner. We made money on it in July and August, and we made money again in September on AMPX. I'm going to go into that chart here in just a little bit because it's on the move, and I want you to know what I'm doing with that. This is the Stocks with Josh show. I appreciate you joining me. I've been trying to sound the alarm. We're going to have a volatile week. The markets are likely going to rip at 2 p.m. tomorrow to the headline news that the Fed has cut rates, and then the Fed's going to talk, and we're going to see whether or not we get the extension of that or a sell-off. What I'm saying, so that I'm crystal clear, is that if we continue to get an extension of that all the way into close and into pre-market tomorrow, I'm warning everyone not to get sucked in by that buying frenzy, because by the end of this month, I think the markets will have pulled back 3 to 5%, which will be setting up for another leg higher in the month of October and November. But that's the sequence of events as I see it, and that's the game plan that I have. Now, I'm going to just tell you that a lot of traders show up to Wall Street carried by their emotions, and they don't have a plan, they don't have patience, and they don't have discipline. And one of the things that I bring to this community and to this YouTube page is I share my game plan, I share my disciplines, and today we're going to make money by taking some profits, and tomorrow we're going to wait until we see those big moves and those reactions to what the Fed says to capitalize on a flush or a pop. On that note, I'm not going to be live trading in the morning tomorrow. I'm going to wait until the Fed speaks. We'll start up around 1:30 tomorrow and run till around 3. That's the game plan for tomorrow. Okay, let's briefly go into a couple of stocks. I'm going to wrap this video up quickly. We're going to shoot over to the chart. All right, Google on the 12-hour time frame has kissed the take profit zone, and tomorrow is going to be an opportunity for this thing to pop back up into this zone where I will be locking in some gains. Now, long-term hold on Google, I believe that we can see Google up to $300, but I believe that that'll come later in the year. You know that my stop loss is sitting at 244.25. Tomorrow, going to be a take profit opportunity. BABA is actually much closer to the middle of my take profit zone, which leads me to believe that we are likely to get up to 170 tomorrow. And again, we don't have any big wicks on these candles yet, which means they're bullish. It means we're going to continue to push higher. But again, if we get to 170, this is where I'm going to begin to lock in some gains. It's time to raise your stop losses on Alibaba. Now, I want to briefly talk about the SPY. You can see that the moving averages has the 9 EMA above the 20, and we have yet to have a cross under, which means that this is a hot trending market. But we've had some unusual patterns that are actually continuing to move to the upside. These are bearish ascending wedges where we have moved from one wedge pattern, broken down only slightly, and now we're sitting on top of one of these wedges. So what that means is we have to watch this line right here very carefully. If we end up closing beneath it or beneath 654, it means that we will come down and hit this 645. That will be our target for the middle of next week. Right now, I am playing this to the upside. We're going to be climbing tomorrow after the Fed announces the rate cut. But let's talk about the stock that this video is largely about, and that is AMPX. These guys are an advanced battery technology. Specifically, it's a next-gen battery company focused on ultra-high energy density lithium-ion batteries using silicone nanowire anodes. It's high-tech batteries, which are specifically needed in the military and in defense. These guys have contracts with DARPA and military contracts, giving them a very strong moat with national defense applications. They've got a huge R&D pipeline and a lot of products that are coming to the market. Now, these guys are not profitable, but I believe that this is going to be a company that you're going to want to hold on to. So you could ride the storm of it going up and down, right? But I want to point out to you why I'm looking at locking in some profits and where I'm looking at locking them in and where I think this will pull back to. Now, this is one that I do want to have long term, but the price movement on this has been explosive. You got to remember that back in 2024, this stock, which is now sitting right below $10, was only $1. So this has been a very, very successful small cap penny stock that has run up quite a bit. And that's the next thing I want to point out to you. There's something called a measured move, which is the way that a stock price candles consolidate and eventually break out. There's a certain percentage move that we expect to get after that breakout. Well, the price action that we're at now is the tippy top of the expected move that we've been in for a long time. And one of the ways that we can visualize that is by looking at the fib trend-based extension. And more importantly, and I'm going to show that to you, more importantly, there is a classic level on that fib extension where absolute majority of the time you get a reversal or a failure of a continuation to the upside. And guess what, fam? We are getting ready to knock on its door today or tomorrow, which means there's going to be profit taking there. Now, I also want to say that everything I talk about is an if-then scenario, because the only way that this would shoot above and exceed this fib level that I'm going to give you today, this strike price that I'm going to show you today, is if some unforeseen catalyst came while the stock was sitting up at these high levels, right, and pushed it even higher. Now, could it be the macro event? Could it be a rate cut? No, that's not enough for this to go even higher than it is right now, significantly. We are probably going up tomorrow, but a significant breakout from here would only happen if something in the fundamentals changed and it got a new unknown catalyst event that was bullish. So I'm trying to make a case for why we take profit and how we know when to take profit. Let's go look at AMPX. This stock was paid us in July. It paid us in August. And if you're part of the Stocks with Josh Discord, I alerted that if it closed above $8, that this was a buy. And here we are popping $2 in the last couple days. But now it's time to watch very carefully for a take profit opportunity. And I'll show that to you guys now. All right, the first thing I want to point out to you on the daily time frame is this chart. Now you can see that I've changed things a little bit. This is not the chart that I showed the Discord and you guys last time. The last chart I showed you is that if we closed above $8, that we were going to run up into this space. This is another solid technical prediction fulfilled. Potentially time to take profit, but pump your brakes. The reason why I'm not going to sell today is because this candle is still bullish. I want to get a candle like this one back here with a huge rejection wick. So far, no sellers have showed up to this party. So I'm eyeing my original target of $9.90. And I even think that we could potentially exceed it. So we're going to be watching to lock in profits tomorrow. If you have followed me on AMPX, this is our third time trading it. We are 3 for 3. But let's take a step back and examine why this won't rip up to $13 potentially without a new news catalyst. All right, I've thrown on the fib trend-based extension, and you can see that we have exceeded the golden pocket, which is right here. So what does that mean? Well, this is the spot where a lot of people would be eyeing some profit taking. And you'd say, well, since we've exceeded it, Josh, then it means this stock is very bullish and we're likely to continue to climb. Now, the fact is that we are getting very close to a place where we likely will hit a wall. And what wall will we hit? Well, it will be the 2.27 and the 2.68 fib level. These are in red and they're rarely passed. The last time we tagged it is when we got rejected, and I'm expecting that we will make another attempt. But because volume has been slowing down, I'm thinking that this is where it would make sense to take profit. Now, in the future, after we pull back, I believe that this $6 to $7 range is going to be a great spot to reload. And I think that AMPX is going to continue to give us opportunity ahead. But the main thing I wanted you guys to take away is the fact is that the 2.618 Fibonacci extension is the most common failure or reversals zone in extended trend moves. And that's the other thing I wanted to show you is that we are in an extended trend move, right? And so I wanted you guys to have a little bit of an understanding as to how and why I talk about taking profits at specific levels. It's because statistically, these are the spots where we should see reversal. Now, does this mean panic sell right away? Josh is talking about selling AMPX, so sell. No, I'm not Jim Cramer, and I think there's opportunity, and I'm going to watch it very carefully tomorrow. But if I begin to see any sign of weakness after this final thrust up to this level that I've given you, that is specifically between 960 and between 1050 and 11. That's the sweet spot and the golden zone for me to lock in the gains that I made when I bought between 7 and 8. Let me know what you guys are doing. Hope this made sense. It's a little bit of the type of education that I focus in on Saturdays when I do a welcome to the Discord event. And if you don't know what I'm talking about my pro trading community where myself and my 7 crown traders work with you guys to teach you the charts, to live trade alongside of you, and to give you my A+ scalp setups. Tomorrow, I'm going to be trading half an hour before we get the Fed rate decision to when the Fed is talking. And hopefully we're going to get some explosive gains. Don't miss out on it. Appreciate you joining me. Thank you for hitting the like, the subscribe, and becoming part of this community. Peace and blessings, my friends. I'll see you in the next video. Tomorrow should be interesting. If you need better trading tools, check out this limited time offer from the Moomoo investment app where you can get up to $1,000 of NVDA stock just for making a deposit. Plus, they're offering 8.1% APY for your uninvested cash for the first 3 months, and 4.1% after that, which is still better than most banks. So your money is actually working even when you are not trading or even looking at the app. Now, I'm going to show you guys some features that I really like about Moomoo. I've always enjoyed these features. Let's go look at them. I'm a huge fan of their earnings calendar. When a company reports, you can just tap the earnings tab to get all the important data. You're going to get the revenue, the earnings per share, as well as the latest company news all in one place. And then there are the zero commission fees on US stocks, ETFs, and options. That's not the case for every popular retail platform. Whether you trade every day or you just simply check on your investments, every once in a while, you pay no hidden fees. Check it out on their website, read the fine print for yourself, and consider whether or not Moomoo is right for you.